This video will give you a sense of how profitable a stable-to-stable bot I'm working on can become, and what factors need to be in place to keep it from being unprofitable. We'll run through a simulation ourselves and backtest it on TradingView. I'll even share the code used for the simulation so you can play around with it on your own. Be sure to watch until the end. By the way, if you want to know where this idea came from, go watch this video in the top right after you watch this one. Sounds good. Let's go. First off, let's get on the same page about the theory behind the stable-to-stable trading. We're looking at stablecoin to stablecoin markets in order to capture moves away from $1 in anticipation that it'll fluctuate around a reasonable range. How much can you make trading this way? We'll go to Google Sheets for some practical numbers. Let's dive in. This spreadsheet is a table of simulated transactions for DAI USDT, where both are stablecoins pegged to the US dollar. The key inputs are colored in blue and the key outputs in green. Adjust the blue inputs to see new outputs. Before going further, note that you can download and make a copy of this spreadsheet so you can play around with the numbers yourself. The link can be found in the video's description. Okay, so initial capital is the money you're allocating to start this strategy. Spread is the percentage points required before we buy or sell. 1% spread here means we want the price to go down 1% before we buy and go up 1% before we sell. For this simulation, we'll put half of the spread above $1 and the other half below. Periods count the total number of buy and sell transactions. Ending balance is obvious. ROE is return on equity. This just means your expected profit as a percentage of your initial capital. Here, you see if the ending balance is $150.94 and your initial capital is $100. Your return on equity is 50.94%. In this column, you can see how many transactions took place, and for each transaction row, you can see the starting balance for the base asset, DAI, and the quote asset, USDT. The amount for each transaction would be 100% of your allocated funds in order to take full advantage of compounding. The type is whether this transaction is a buy or a sell, and you can see the ending balance after the transaction happened, along with fees paid, total balance, how much this transaction made or lost, and the percentage gained or lost. When developing our stable-to-stable trading strategy, we are solving a practical math problem at the core. What should the ideal spread percentage be? You'd want it low enough to have a good number of trades happen, but not at a point where the commissions you pay are higher than your gains. You'd also want it high enough to have high enough profit per trade, but not so high that the market does not give you enough opportunity to make it meaningful. To gauge historical performance, I downloaded all the historical data I could find from this exchange and ran a counter to count how many times price goes above the top and below the bottom, alternating one after the other, in order to simulate buying and selling. Essentially, counting the periods that you saw in the previous spreadsheet. This method is a lower bound for the actual number of transactions, as I don't have enough data to detect the price movements that happen inside of a minute. Over a year, there should be more transactions that happen within these minute spans. So as I run this code across different spreads by changing the high price and the low price, I would get a result of how many opportunities this market provided. These are some of the results. Based on the limited data I have, it's no good to go below 0.6% spread, as the expected profit drops too much for my liking. I haven't done enough testing on the high side to see if there will be enough rare occurrences of above 2% spread to make it interesting. I could continue testing this out by hand, but let's keep going. We should get another perspective. Let's backtest this idea on TradingView in order to get more assurance we're on the right track. TradingView is a freemium charting tool for all kinds of traders. They have a scripting language, PineScript, that allows anyone to make their own custom indicators and strategy. Since I'm completely new to PineScript, I'm going to ask a friend to help. Here's the prompt I wrote to ChatGPT to generate the main idea into PineScript. It had the right idea and pretty much was 80 to 90% done right off the bat. I spent a few more hours changing a few things and debugging to make sure it ran the simulation to my liking. Here are the results. I'm going to change a few settings. Let's change the commission percentage here to 0.145% to be more conservative. Our spread to 1% to be the same as our early findings, and the start date to be April 2022 to approximate our return over 1 year. So, we have a net profit of 35.1%. Don't get too excited yet. I'll talk about the limitations TradingView has in a second. Next, we have a total of 11 closed trades for the year, which is also only somewhat reliable. And of course, we have a 100% win rate. This really shouldn't be a surprise. After all, it's a constraint we've explicitly chosen at the beginning in order to reduce our risk as much as possible. And it's a result of choosing the right stable to stable pair and making the right choice in terms of what spread to use. When backtesting on TradingView, there are some fairly serious limitations that you should be aware of. First is the amount of available historical data. I'm only on their Pro plan, which only gives 10,000 historical bars. So if I'm on a 1-minute chart, it's only able to give me 10,000 minutes, 6.9 days, not even a week's worth of historical data. And if I go on a daily chart, it'll give me 10,000 days, which is plenty, but I'll lose out on all the intraday price movements, which will understate the effectiveness of the trading algorithm by quite a lot. Also, as far as I can tell, TradingView only supports market buys and sells. You can see in their list of trades, they market closed my trades, so the backtesting algo is realizing different levels of profit every time I trade. It's definitely not the consistent test I was looking for, so take the backtesting done on TradingView with a healthy grain of salt. In case you want to play with the numbers yourself, you can find the link to this Pine script code in the video description below. Although we found a wide range of estimated profits from both manual simulations and TradingView, we'll assume that the market will respect historical patterns to generate enough profits. Our next step is to build a bot connected to a centralized exchange, trading this one pair, and test it out in a live setting with a small amount of money to account for factors like liquidity and slippage. This video showed the potential for a consistently profitable stable crypto trading bot. By keeping things simple and being clear about our profit-taking strategy, we saw a theoretical 100% win rate. Stay tuned for the next step where I build this bot and connect it to a live exchange. If you liked this video, consider sharing it with someone who needs to see this. This is Smart Crypto, and you've been awesome for watching until the end. See you